lakh income and zero tax. Sounds like a dream, right? But what if I told you the tax-free promise comes with conditions that most people are completely missing? From April 1st, 2026, India is entering a completely new tax system. And while it looks similar on the surface, there are hidden changes that could either save your money or quietly cost you more. So before you choose between the old or new tax regime this year, you need to understand one thing. This is not just a tax update. This is a shift in how your income is tracked, taxed and reported. Starting April 1st, the new Income Tax Act 2025 and the Income Tax Rules 2026 come into force. And the biggest change is this. The new tax regime is now default. That means unless you actively choose the old regime, you will automatically be taxed under the new system. The government says this simplifies taxes with fewer deductions and cleaner slabs. Under the new regime, the income up to 4 lakhs is tax-free, then gradually increases from 5% to 30% for the higher income brackets. But here's where things get interesting. Due to the rebates, your income up to around 12 lakh can still result in zero tax liability. And that's the headline everyone is talking about. But here's the catch. The new regime removes most deductions. No major benefits from HRA, ATC investments, home loan interest. All of that either reduces or disappears. So yes, tax rates look lower, but your taxable income might actually be higher. This creates a simple divide. If you don't invest much or claim deductions, the new regime may benefit you. But if you actively save taxes through investments, insurance or loans, the old regime could still give you better outcomes. So the real question is not which is cheaper. It's how do you earn and spend your money. Now let's talk about the changes people are not paying enough attention to. Allowances have been massively revised. Education allowance just jumped from 100 rupees to 3000 per month for per children, and hostel allowance goes up to 9000 rupees. That's a huge increase on paper, and at the same time, compliance is getting stricter. PAN is now required for large transactions like hotel bills, property deals, and even cash deposits at higher limits. More of your financial activity will now be tracked through AIS, which means fewer chances of hiding or missing the disclosures. If you are an investor or a trader, the impact is even more direct. STT, which is a tax you pay on every trade, has increased sharply. Futures trading tax has jumped 2.5 times and the options trading costs have also gone up. For casual traders, this might not be a big deal, but for daily traders, this can significantly eat into profits over time. Buybacks are also changing. Earlier, the money you received was taxed like dividends. Now it will be treated as a capital gains, which changes how much tax you actually pay depending on your income bracket. And if you are investing in sovereign gold loans, that's where the major shift. Earlier, holding till maturity meant completely tax-free gains. Now that exemption only applies if you bought it in the original issue. Secondary market investors may have to pay tax. The system itself is also evolving. Filling forms are being simplified, multiple forms are merged, and deadlines for some taxpayers like ITR 3 and ITR 4 are extended to August 31st. The revised return window is also extended to 12 months. But along with this simplification comes tighter reporting. More transactions will automatically appear in your tax records. Insurance reporting thresholds are lowered and foreign transactions will be tracked more closely. This means one thing: less flexibility, more transparency. So is the new tax system good or bad? The answer is simple. It depends on you. For people with fewer deductions, it's simpler and cleaner. But for those who actively invest and plan taxes, the old system might still be powerful. This is not just a policy change. It's a mindset shift from saving tax to simplifying tax. And the real winners will be those who understand the difference before making a choice. If you found the breakdown useful and want more such real simplified insight that actually impact your life, please subscribe.